Intel surged 6%, scoring 67 out of 100. This rally hinges entirely on Intel reclaiming the transistor density crown with its upcoming 1.8 nanometer manufacturing process. Regaining this structural scaling advantage is the only metric that can truly restore their historic gross margins. Our deep dive teardown reveals if this high-stakes foundry pivot will actually save the silicon pioneer. Intel is flashing on every screen after a 6% surge to $139.63. Retail momentum supercharges this rally, with forum discussion volume spiking 340% over the last 48 hours. Mainstream media claims this is just speculative chasing, but retail has actually identified a legitimate turnaround thesis. They see capital rotating away from overextended software placed directly into Intel as the next major hardware infrastructure winner. With a market capitalization of $702 billion, the market is pricing in a massive structural comeback. This momentum pushes Intel to outperforming the technology sector by 0.7% over the last month. The physical reality of this pivot hinges entirely on the yield rate, the percentage of usable chips on a silicon wafer. This must occur on the Intel 18A process node, the 18-angstrom manufacturing technology that defines transistor density. To justify this valuation, Intel must deliver a defect density below 0.5 defects per square centimeter. Compare this to TSMC's N3E, the 3-nanometer process node that powers current market-leading accelerators. TSMC maintains an estimated yield above 80%. If Intel cannot match this physical efficiency, its foundry margins will collapse. The engineering reality does not yet justify the market's aggressive bet. Quarterly financials showing modest revenue momentum for Intel. By Q3 2026, the hawkish policy pivot from the Warsh-led Federal Reserve will compress Intel's capital expenditure cycle by at least 150 basis points being hundredths of a percentage point used to measure financial changes. While Wall Street celebrates 6% jump, a normalization of the yield curve, the graphical representation of interest rates across different maturities, to plus 0.31% signals that cheap capital is dead. With a high beta of 2.23, a measure of a stock's volatility relative to the broader market, Intel is highly sensitive to the Fed holding rates at 3.63%. This restrictive monetary environment collides with escalating tariff uncertainty, forcing Intel to absorb higher costs just as mature node. Older semiconductor manufacturing processes, pricing rises. Geopolitical friction is rewriting the hardware map. The threat of a Greenland-style trade war creates severe choke points for rare earth mineral sourcing, threatening to decouple domestic defense manufacturing from global supply chains. Intel's defense revenue backbone, including a $355 million Department of Defense contract backlog, is highly exposed to these critical raw material disruptions. This geopolitical friction acts as a massive wave of friction, while TSMC's surging monthly revenue of $417 billion new Taiwan dollars acts as an accelerating competitor force. Socially, the political mandate to secure local silicon supply chains is a tailwind, yet public backlash against high-tech subsidies intensifies as inflation remains at 0.6%. The market is pricing in an AI savior, but the physical reality of restricted supply chains and a hawkish Fed means Intel's structural margins will face severe pressure. Intel reported earnings per share of $0.29, beating the Wall Street estimate of $0.01 by 1971.4%, a solid beat that signals strong execution. Intel is trending higher, currently at $139.63. Management's headline, America 250. At a pivotal moment for the nation, Intel is advancing U.S. innovation, AI, and manufacturing. 3 words, America, innovation, manufacturing, designed to make investors feel patriotic tailwinds, not margin math. The PR machine is selling a narrative. Intel is the sovereign AI foundry, the CHIPS Act hero, the only US player that can scale 18A and 20A nodes. What they're not saying, that every press release in the last 30 days mentions government 35 times, AI only 7. The subtext? The real customer isn't the cloud, it's Washington. Now look at the insiders. 61,280 shares net sold in 90 days. That's not a trickle, that's a fire exit. When executives dump stock while the PR team is pounding the pivotal moment drum, history says one thing. They're selling the story, not the silicon. Retail is buying the hype. 89% bullish on stock twits. Reddit mentions up 13 ranks in 24 hours. But the crowd's thesis is pure momentum. Rumble's data center spin-out proves Intel's assets are undervalued. That's not a thesis. That's a meme. The gap? Institutions are trimming. Capital World cut 23%, and while BlackRock added 4%, that's rebalancing, not conviction. The real tell? Short volume is flat. The bears aren't piling in. They're waiting for the government checks to clear. EPS beat by 1971%? Sure, but that's a rounding error on a 1-cent estimate. The momentum breakdown for Intel. RSI sits at 69, pointing to bullish momentum with buyers in control. MACD is currently bullish, with the histogram crossing above 0. The bull case rests on Intel regaining transistor density leadership. The high-yield ramp of the Intel 18A process node underpins Lunar Lake. Backed by U.S. CHIPS Act subsidies, domestic fabs insulate Intel's leading-edge foundry business from Taiwan geopolitical risks. This manufacturing pivot is critical to recapturing lost market share. But here's what breaks the bull thesis. Enterprise data center budgets remain heavily skewed toward NVIDIA GPU clusters. This starves Intel's Xeon processors. With a forward PE of 89.8x, delays are costly. The rising wedge chart pattern signals weakening momentum right at the $140.94 resistance level. The 0.41 put-to-call ratio shows bullish options flow. Here is the question that makes the room go quiet. Can Intel secure a major hyperscaler design win on 18A? The lab's answer is no. Goldman Sachs recently upgraded Intel to neutral with a $150 price target. However, Capital World investors trimmed 23% of their position. This signals deep skepticism about Intel's execution timeline. Our conditional call is clear. If Intel secures a major hyperscaler design win on 18A by late 2026, the stock will break resistance. It will target $160. If 18A yields falter, expect a rapid decline to support at $99.17. Our AI score of 67 to 100 reflects moderate conviction that execution delays will drag this stock down first. Here's the macro picture shaping Intel. The U.S. CHIPS Act funding directly subsidizes Intel's domestic expansion of its Ohio and Arizona fabs, shielding its leading-edge IFS foundry business from escalating Taiwan geopolitical risks. However, tightening U.S. export controls on advanced silicon severely restrict sales of gaudy AI accelerators and high-performance Xeon processors to Chinese enterprise customers. Intel is aggressively adopting high-NA EUV lithography and advanced Foveros 3D packaging to regain transistor density leadership over TSMC with its upcoming Intel 18A process node. This manufacturing pivot underpins the rollout of Lunar Lake client processors and Clearwater Forest server chips, which are critical to recapturing market share. The primary near-term upside catalyst is the successful high-yield production ramp of the Intel 18A node and securing a major external hyperscaler design win for its foundry services. Conversely, the biggest downside risk is further delay in enterprise data center spending as capital budgets remain heavily skewed toward NVIDIA GPU clusters. Intel's 3% earnings beat and strong data center demand drive the buy. Have you traded Intel before? Profit or lesson? Tell us in the comments. Remember, this is educational content, not investment advice. Always do your own research and never trade based solely on our videos. Past performance is not a guarantee of future results, and any losses are your responsibility. We also recommend consulting a qualified professional before making any decisions. Subscribe so you don't miss Tuesday's deep dive. We're tearing down Astrolabs. If you want our full breakdown on Rocket Lab, the link is in the description. Stay sharp and see you next time.